So that's basically when it all started. That's when the transformation happened. And what time period are you talking about? Who was at the helm at Deutsche at that time?
The CEO of Deutsche Bank at the time was a guy named Alfred Herrhausen, he was kind of a statesman in Germany and internationally. He was one of the world's leading advocates for the forgiveness of third world debts, for example. So this was someone who took a very kind of global and almost diplomatic role or view of his role and his bank's role in world affairs. He wanted to make money, but he also viewed Deutsche Bank as having this kind of historical responsibility for making the world a better place. And the view was that in the long run, that's good for profits for Deutsche Bank because if the global economy is growing, that lifts the financial system along with it. And so he kind of dove into this by buying in 1989 this venerable British investment bank called Morgan Grenfell, which was an offshoot of the old JP Morgan empire. And that was a first kind of baby step that Deutsche Bank took into the wild Western world of investment banking and sales and trading, but it was a very small step. And within several years of that, it became clear, Herrhausen, by the way, was assassinated barely a week after announcing the Morgan Grenfell acquisition because he was viewed as this great symbol in Germany, this symbol of global capitalism. And so he was assassinated by I think it was a group called the
RAF.
Yeah, the Red Army Fascists, is that or faction?
That's right.
Yeah,
right.
so which was trying to kind of view Deutsche Bank as the, I guess, kind of the vampire squid of the time.
Right.
And that turned out to be, I mean, obviously assassinating people is not a good policy decision for the most part, but in this case it turned out to be especially bad because Herrhausen's replacements were people who viewed Deutsche Bank's mission as much narrower and much more oriented toward maximizing short-term profits than Herrhausen, the statesman, had viewed it. And so the mission of Deutsche Bank went from under Herrhausen and his predecessors. It was that their goal is to serve a bunch of different constituencies. Shareholders are one of them, but so are customers, so are employees, so are the communities in which the bank operates, so is really the global community. And it went from being that kind of broad, holistic view of things to being a much narrower vision, which is that we exist to serve our shareholders, and in the short term in particular. Right. And so a succession of executives after Herrhausen's assassination they really stepped on the gas and dove headfirst into Wall Street and the City of London as really the defining kind of generational opportunities that they faced. And the result initially was very successful. Deutsche Bank went from being essentially a non-contender on Wall Street in the City of London within several years and having spent billions of dollars hiring people in the US and in London, became a formidable competitor to the really established Wall Street banks. It was one of what I describe in the book as one of the great migrations in Wall Street history, where they are the leaders of Deutsche Bank who themselves are Credit Suisse or Merrill veterans, are hiring thousands and thousands of people in a matter of months to come build from the ground up this swashbuckling new investment bank.
And actually, we were talking about this maybe 2 days ago, and I was telling you that's when I came to Deutsche Bank in the late 90s. It was under, I think Breuer was the head at that time, and Edson Mitchell was a Merrill guy, was the guy who was bringing all the swashbucklers in. He brought in Andrew Jain, who later became the CEO. But it was under the guise of Deutsche Morgan Grenfell. So they took the Morgan Grenfell acquisition and made it into this is who we are now. And as I remember, that was exactly what all the other investment banks were doing. SBC, Warburg, there was Dylan Reed.
That's right.
We had Hor Govet who went on with.
Well, that is a name I haven't heard in quite some time.
And so all of the continental banks were taking these investment banks in the UK and saying, look, now we are just as good as the Americans. We have this Anglo-American thing, and we're going to do it in London. It seemed that London was the place to be.
Well, London's the middle of the world, right? It's in a lot of ways. It's the middle. It's a time zone that bridges Europe or bridges Asia and the U.S. It's a melting pot. You have great, easy access to markets all over Europe, Middle East, and Africa. And also, it just traditionally, going back many centuries, is a global financial crossroads for the world. And yeah, so this became, especially for European banks, London became this new financial hub where, through a combination of acquisitions and very aggressive hiring, all of these banks started to remodel themselves in the Wall Street model. And I would argue none more successfully and comprehensively than Deutsche Bank. Well, go ahead.
And what does that mean? Like the Wall Street model, what was different about the Wall Street model than the model that Deutsche and these other banks had before?
Well, there was just, for the most part, they didn't have big sales and trading operations.
Right.
They would help Deutsche Bank let's say pre-1989, or probably even pre-1995, if they had a big European client that wanted to say, I don't know, wanted a loan to build a railroad in Brazil, Deutsche Bank would probably provide the loan to do that. What it would not do, though, is provide any sort of hedging services. So it wouldn't provide derivatives to protect them against swings in interest rates or any political or kind of environmental or weather instability, anything like that. It wouldn't provide foreign currency services on any kind of sophisticated level. It maybe would help convert dollars into Deutschmarks into, I don't know, other currencies, but it's not providing any sort of
advanced, sort of like bespoke type of services.
Yeah, nor is it helping the companies deal with the in a sophisticated way anyway, of having an increasingly global workforce. So it was built for a very simple time when a company would come to Deutsche Bank and need a loan to finance a particular project in a particular part of the world. And that's a pretty simple solution to provide. You kind of underwrite the loan, you look at the risks, and then you set interest rates and loan terms based on the risks so that you make a profit. But it's a very simple service to provide. And it was just being left behind by these Wall Street banks that could come in, offer these products with all these bells and whistles that were offering the prospect of more or less complete protection from any uncertainty in the future. And for that privilege, the banks would charge very rich fees.
Right.
And but look, those are valuable services, right? If you can eliminate risk from a business, that's kind of the holy grail of capitalism, right? And of course, it didn't quite work out that way, but Deutsche Bank viewed the rich pool of profits that awaited and the ability to be able to serve their clients and new clients in a comprehensive global way as a very attractive proposition. And I think that was part of what lured all these other banks down this similar path as well.
You know, I mean, ostensibly, their huge balance sheets are a benefit to them relative to the likes of Morgan Stanley, Merrill Lynch, or Goldman Sachs, who were the guys who were coming in along with JP Morgan. JP Morgan obviously had the balance sheet as well. So,
right, especially at that time, before Goldman and Morgan Stanley became banks, Deutsche Bank had, like some of its competitors, had this ability they were taking in huge amounts through deposits and through ability to borrow on the markets that they could then lend out or use for other purposes at a much lower cost than a Goldman or a Morgan Stanley. And so that provided them a huge advantage, and their balance sheet grew very quickly as a result of doing that. And for a while, as long as it was kind of a benign macroeconomic environment and a benign regulatory environment, this was a very easy way to very quickly become a global player.